Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, and we're at the 19th of August, 2020, about 6:40 p.m. Central Time. Well, you can see we're continuing the break in these markets, the break in the metal markets. It was one heck of a nasty day. The FOMC announcement, when it came out on the surface, didn't seem to do anything. It was later as the market started feeding back and forth, and I think it was off that their minutes, away you went. So when I read the minutes, and they're in my update tonight for people to look at, I didn't see anything that I'd hang my hat and said is bullish or bearish. Yet, I think what it was is the market wanted more, and since so many of these markets have been going up relentlessly, maybe it was time for a setback. You know, psychology is as much as anything else. That's what I think was going on. In the foreign currency market, I'm looking at the market that in the euro had gotten overextended to the upper band, the dollar index to the lower Bollinger Band, and that's what I'm talking about in bands, and they did what they should. They bounced away from that. Bonds and notes, nothing big going on there. Energy markets are going to digest whatever OPEC tells us they're coming up with. I wrote today that I don't expect them to come up with anything. I don't think they're going to flood the market with more product, and I don't think they're trying to do much one way or the other but get everything in balance. So let's take a look at the S&P. For the week, you're pretty neutral. You're up 1.75 points on a weekly close. So you haven't done anything. This market's actually pretty neutral. It's the daily charts that are all over the board. And you can see you had an outside, well, was it an outside day? Let's take yesterday's low, 33.65 and a quarter. You missed having an outside day by one tick, actually two. You had to get through that number, and you're following through a bit to the downside today. That's okay. So as I look at what that market's doing, that's a trade top that is forming. And if you take a look on the swing line, you've got a higher high with it. So until you take out 33.50, you still have very much this pattern of higher lows, higher highs. The market is over the 18-day average, but to get back to it for support, you have to get through that number and back to the 33 and a quarter area approximately. And keep in the back of your mind, each time you've gotten under this 18-day average, you've been there for a flash, and then the market came right back to the upside. In terms of Bollinger Band, you're not near it at this point. So that is one of the things you're looking at. Momentum. You have not lost your embedded reading. You might, but it hasn't, and it's showing no signs of it yet. So you can either be a hero and say, oh, I'm long, I think I'm going to step aside, or you can say until that's lost, it could still turn itself, flip back, and how do you get back into the market becomes the question. In the NASDAQ, you still have your embedded reading. Remember, you're open already. You have a higher high, but you have this funny pattern. I've pointed that out before. And with tonight dropping down, if we take a look at the low that we made today, Wednesday, it was 11,299. We just broke through that tonight. That will, too, be a trade top. Actually, I'll be moving this arrow, pointing it down there. So it'll be still a pattern of a higher high, but I don't know where the lows actually are. In the Dow, you're losing the embedded reading. You don't want to own this. When you lose an embedded reading, wait. It's only losing it on the evening session so far. It did not lose it during the day. It's flirting with it. Now, the question is, on any form of a rally back, does it want to re-embed? It's got to close to lose it, not intraday you're losing it. Keep that in the back of your mind. This market has also been one that's been in a corrective mode, having lower highs, lower lows. So let's assume that continues and you lose it. I'll be looking again for this 18-day average where the market seems every time to find the support and then comes back and has, on a regular basis, made new highs for the move. So have I changed on anything? No. I realize the next FOMC meeting is on the 16th of September. It's a long way off. Who knows where we'll be. The Fed, I think, is impressed that inflation, a little bit of it's picked up, and we see that in the daily reports that we present to you here. So that's okay, too. Little inflation is not bad for an economy. You don't want deflation. And that's what I think they've said they've avoided. They're not creating yet a big inflation picture. If they do, then you're going to hear talks, well, interest rates are going to go up, the Fed's not going to keep buying all these programs. I don't think we're anywhere near that. You got to get out of the COVID situation to know that that's going to occur. Lower highs, lower lows in the Russell. I've said right on through, this is the one that I like the least of everything. It began losing its embedded reading, as you can see here. It just barely held on Tuesday, lost it, and it's continuing. So I'm looking for price in the 18-day average in this particular index to come together. Then we get to, let's see, this should come up in a minute, the Vix. It takes a moment sometimes. There we are. A nice bounce, but I still think the pros called it a day. So could we eventually, on a big rally and this, get to the stock market a big break, get back to 2203? Yeah, but remember, the pros probably wrote their puts, as I said, around 2110. I don't think they were playing this market. It's going to be less than 2203 tomorrow. It's going to be basically a small gain if it can get to that 18-day average. That's why they have to have, it's like every trade. I'm going to be wrong. I'm sure you're not, but I'm going to be wrong. And when you're wrong, you have to have control of what you're wrong. You have to know your risk before you make the trade. Can you live with it? Can you not hit your head against the wall and go, darn it, darn it, darn it? Beginners do that. The pros realize trade that didn't work, got to get it out of your head and move on to the next trade, because that could make you the money back. Keep that in the back of your mind. If you can't think like that, you're not going to make it in these markets and futures. In this particular market, we now can say that we have lower highs. This was a double top up here, and now the market's got lower highs, lower lows. It's an outside day down today. If you take out the high of an outside day down, within 2 trading sessions, so that would be Thursday or Friday, it's often a sign that the market has caught the shorts and it wants to go back to the closest moving average, the 18. Until it's taken out, you've got yourself another pattern, and that pattern's down. What about momentum? Well, if we look, both numbers, I don't want to count Thursday. I want to go to Wednesday because we don't know how today's going to finish up, or tonight's session into tomorrow. Both numbers under 20. Both under 20 on Tuesday, not both under 20 on Monday. So today, the Thursday session, is going to be the importance. Can it embed or not, and what will that mean? In the 10-year notes, you're nothing like that. 10-year notes did the same pattern, lower highs with a break in the market, but is in an outside day. Take a look. The low here was 139.08. The low now here is 139.08 and a half. I drew the line down because I'm anticipating that the market's going to stay like that. It's the wrong thing. You really have a higher high, lower low pattern, but I'm guessing it's going to do that. I feel good about certain things. I feel good that as the market was falling down in the bear trend, I was telling people I thought the market would hold the first challenge of the lower Bollinger Band. And today the market comes back rather big, 60 points on it. Intraday it got as high as 93.06, which was up about 80. I'm looking for resistance in the neighborhood of the 18-day average, but I don't think anybody's going to get aggressively short as momentum is trying to pick itself up. I think we're going to have to wait and see. Was this rally a flash in the pan or more? Eurocurrency, flip-flop of it. If we go to yesterday, this is what you looked like. Here's yesterday. You get to the upper band, overbought, and now you're getting the break in the market. So the question is, can it get down to the 18-day average for support? As long as you don't take out these previous break lows and you hold in there, this chart is still bullish, but it's got momentum diverging away, pointing down. So when you get the divergence of momentum, it's like pulling on water. You know, you get an anchor, you got to pull it out of that water and let the momentum do its turn with you a bit. In the end, it's just a whipsaw. Straight up, straight down, all these plays, too volatile for my cup of tea to even explain. Bitcoin did its job. It fell back to the 18-day average and held it, but the market had lost its embedded reading, finally got back to that number. It's still pointing down, so you've got to be patient with the market. Wait for the momentum to turn. If you take out this low, you lose the uptrend, and that number here would be specific, 11,325, and right now you're closer to what, 11,945, so that's $600 away. In Bitcoin, that's nothing. The differential between October Brent and WTI oil seems to be happy at the 2.25 area. You're still stuck in what I call these pipes. You see it right there. You've got one here. I've told you not to trade in these, and I'm staying with what I teach. Right there as well. The friendliest of the group is the gasoline, and that's because it's trying to push on it, but I still don't trust it. It's really that simple. And in the nat gas, a whole different world. This is a bullish situation. We have a big heat wave coming through now. Watch it from the West Coast. Look at what's happening through all of the United States. The Dakotas are going to be in 101 degrees. We're getting ready in Chicago to be very hot. It's going to move east. So you're going to get demand usage, and that's part of what this market is anticipating. When it discounts it, you'll see the vacuum in the market. We'll write about that nat gas play, by the way, in our market research here, because that's what we do. We talk futures to futures traders, options. They come from seasoned pros. I've got 50 years experience. The guys that are writing these reports, some of them have as much as I do. So we're talking the market. Some of them have a little bit more. We've been around a long time, and I've been with the people at Linn Group my whole career. So that's a long time to be going with them. It's been a phenomenal relationship, and now I deal with the kids of the original owners, and the original owners are still in the company. But if you'd like to learn more and see what we write about, how we do it, and why it's for the futures trader, it's free. Take a look. You only get a 2-week trial, but it's free. Go to our website, go to free offers, choose anything else you want, and away you go. I'm Ira Epstein. You have a good day. Licking off some of the wounds of those metals breaking back today, but that happens from time to time. You have a good day.